By jingo, there's a donkey on the bridge. Whatever shall we do? And just a little bit of fun to get us going this week. So with that said, let's set the scene and wind the hands of time back. The year is 1943, and we're going to focus on a small but significant portion of the Allied campaign in Italy, Operation Husky, which led to the effective collapse of Mussolini's reign. General Patton's troops drove the Axis powers from the island of Sicily and set the stage for the invasion of Italy. Now, during the campaign, a column of US Army soldiers and vehicles and equipment was essentially at a standstill on the road. Now, the stationary soldiers then became an easy target for German fighter planes, and they began to strafe the columns, causing considerable damage and casualties. Patton, enraged by the fact that the column was vulnerable to the enemy fighters, hopped in a jeep and he raced to the front of the column. And once there, he found two donkeys who were pulling a cart on the bridge, had sat down and refused to move on this bridge spanning the river gorge. Now, surrounding the stubborn and immovable mules were several servicemen and the donkeys' owners. And they were all engaged in unsuccessful attempts to coax these stubborn mules to their feet to move them across to the other side of the bridge, thus ending the stoppage. Now, Patton was incensed by the fact that these two stubborn donkeys had caused the army column to stall, being exposed to enemy fire and incur damage and casualties as a result, and obviously, many deaths. He quickly assessed the situation, pulled out his revolver, and, to the surprise of those around him, shot both mules dead and ordered the troops to throw the mule carcasses into the river, thereby allowing the military column to move forward and out of this danger that they found themselves in. Now, it becomes one of those stories of legends, and, it turns the phrase, shoot the donkey. So, what's your donkey? What are you trying to do? Are you trying to trade everything? Are you imagining mistrades? Are you counter-trend trading where you should be trend trading? What's the blockage in your trading? What's holding you back? Is your position size too big, causing you fear of losses? Are you second-guessing your trading strategy? Do you have a trading strategy? There's so many factors that can trip the new trader up. So what we always want to do, again, the three tenets that I teach and preach are, we want to trade small position size. Again, not necessarily what the textbooks say. The textbooks often advocate, 1, 2, 3% of your account equity on any individual trade idea. I'm a huge advocate of trading your emotional position size. Your mental bank balance is often significantly lower than your practical ability to trade. And this often is what holds a lot of traders back. So trade small, and trade down to the sleeping level, down to the point where you can sleep at night. You've not got the sweaty palms, you've not got the fear, the anxiety, am I going to be stopped at again? Is it going to be painful? Are you going to get pissed off? You're going to get annoyed? Whenever you've got that emotional response or reaction to trading, there's a really good chance that it's position size related. So reduce your position size down to a comfortable and sensible level. I often say to all my traders, what's your number? Everyone's got a number, and to be fair, I've seen multimillionaires cry over another $50 loss. $50 is nothing to a multimillionaire, but it's just another $50 loss. It's the straw that broke the camel's back. It's the emotional bank balance is what I'm trying to refer. So everyone's got a number that you're comfortable with. If you have 10 losses in a row, just as an example, 10 losses in a row at that number, is that going to prevent you from placing the 11th trade? Because inevitably the 11th trade is always the one that works out, is always the one that, works in such a way that it wins back all the others, or puts a significant dent in that temporary run of trades. And it's always temporary on the assumption that you've got a strategy, a proven positive expensive strategy, which is the second tenet. So reduce your position size to a sensible level, and that allows you to place the next trade and the next trade and the next trade, and to trade through rough patches of any strategy. And it's not just a trading thing, it's life and business. There's going to be good times and bad times. If we took the same concept to the real world of business, then you're not going to have every customer that walks through your door, buy one of every colour, of every size, of every product that you've got in stock, you're not going to have 100% success rate. So there's going to be times where you don't sell anything. There's going to be times where customers come and give a refund. And there will be times where you have a big customer who wants more than the average cart value. So reduce your position size and have a plan. Are you going to, again, to use the business metaphor, are you going to sell shoes on a Monday? You're going to sell fidget spinners on a Tuesday? Are you going to sell beanie bears on a Wednesday? Because, hey, you didn't sell fidget spinners on Monday, but hey, you see where we're going with this? You're not going to be chopping and changing what your business plan is. But for some reason, traders, as soon as we step into the world of market or financial market trading, the idea of having a business plan gets thrown out the window. So have a plan. It could be a simple plan. It doesn't have to be complex. My first trading strategy was on the back of, essentially the back of an envelope. It was a simple plan. I wanted to, again, I was more day trading. I'm doing a little bit more of that now. It's essentially the same strategy I was trading 20 years ago. I'm looking for a pre-market consolidation, and I'm going to trade the first pullback after a breakout. Dead simple. And that's what I pretty much spent the first 12 years of my trading career doing, and I've reintroduced it back into my trading routine with the lifetime of experience that I've got in my trading. So I've got multiple strategies, multiple plans, and I trade small position size on all of them, because that allows me to place the next trade, because there will be good times, there will be bad times. So as long as I've got a strat that is expected to win on average over multiple occurrences, which is time tested, back tested, forward tested, every which way tested, real time traded over thousands of trades, I've got the data to prove it, then I just need to trade small, trade through the good times, so that I can be on the good times. The last part of this process of shooting donkeys and making sure that you've got the best opportunity to win at trading on a regular, daily, consistently basis is to trade frequently. Now, I used to say trade frequently, but I don't mean like pew 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 Nintendo, just clicking the buy button. Like, trade frequency is probably a better way of describing it at this stage. Again, my understanding of my own system and concepts gets better and better over time. I am a product of my own system after all. But trade frequency is a better description. Every strategy, when you've got it to the point where it's automated, where you've got a strict, rigid set of rules of if this, then that, I refer to what I do as a production line. Step 1, step 2, step 3, step 4, put the trade on. You move your decision along this production line of decisions to the point where you put the trade on, and then you move on to the management production line. Have these conditions happen? If yes, place trade. It's a series of if this, then that. That's what I refer to as an algorithm, a strict rule-based decision-making process. It means that I can backtest it. Based on that backtest, I've got an expectation of what's on average, or how many trades on average that it occurs. So trade frequency these days means that when the next trade sets up, the trade goes on. So the trade sets up, the trade goes on. And that means that I can emulate the frequency that I'm expecting a strategy or the strategy or several strategies to develop. Again, it may be that one setup develops today, it may be that 5 setups develop today, and if none develop this week, then I don't trade this week. You see what I'm saying? It's like I've got to trade with the frequency that the strategy says to trade, so that I can have the positive expectancy. I'm following the strategies to the letter. And trading small position size allows me to follow the strategy with the frequency that I'm supposed to do. So they're all interwoven to the point where we have a consistent business-like approach to, well, the business of trading. Because again, if we put it into the real world, if we behaved like traders in the real world of business, it would be like, I don't feel like opening the shop up today on Monday. I'm going to come in at lunchtime on Tuesday, but I'm not going to tell anyone. I'm not going to restock the shelves. I'm not going to buy the produce. I'm going to be late payments. How long do you think that business would last? It's a bad business being badly ran. So that to be true in the real world of business. So don't do it in the business of trading. Have a plan, have a strategy, have small position size, don't bet the farm, and trade with the frequency that you're supposed to trade as per the rules that your strategy dictates. And if you need a little help with this, get in touch, shoot me a message. There's links in the description. And, at the very least, I'll always point a trader off in the right direction for what you're looking for out of your trading. So with that said, let's hang our spurs up for the day, but just give it some thought. Like, why aren't you seeing your success? What are your donkeys in your trading routine, and which ones can you shoot and push off the bridge so that you start to get some momentum back in what you're doing and start to see some trading successes? Keep in mind that futures, options on futures, stocks and stock option trading involves a degree of risk that may not be suitable for all investors. Past performance is no guarantee of future performance. Anti-Investor provides educational information and does not provide financial advice.